Hey traders, welcome back to my channel. In this video, we're going to talk about core fundamentals, how price action moves, and how to identify the high probability setups. The structure in front of me is a clear downtrend. We have series of lower highs and lower lows. So price action is telling me we have a trend down. Since we have a trend down, my goal is to identify a proper channel because every single movement on a chart is contained by a channel. There's a reason to price movement. These candles are not working on a chart randomly. There's always a reason where the candles are heading. So as you can see, I identify this wider channel connecting the swings at the top. And my goal as a price action trader is to pick the right spot where to enter, where the chances of the setup succeeding are the highest. And you can see I'm going to do this by following price action rules and taking a high probability setup. So we had a failed second entry long. This is a second attempt to go long that failed because the trend is down. And this is the lowest low of this entire move. I'm going to reset the count because I'm counting for short entries. I'm not going to take first entry short. No, that's not a high probability setup. The second attempt is going to be the high probability setup. Market likes to move in pairs of twos. You have a first entry short, pull back, second entry short. Great deal 1 signal bar, rejection of the 21 bar exponential moving average, which is a key entry point. And because trade is down, we expect for price action to continue working lower. New low was reached again. I'm redrawing the short-term channel, trying to respect the correction. And here we have another second entry short of 2 key entry points. But the signal bar has a big bullish tail at the bottom. It is quite stacked, neutral. I'm going to wait. And notice what price action offered. A lower high to this second entry short, which is confirming this second entry short of 2 key entry points, the trend line and the EMA. And even though we have matching highs here, so you may wonder, is this a legitimate lower high? It is, because this bullish bar broke 1 tick above this bearish bar, which means this is a new high, first entry long. And if there's going to be a break below this bar, it's going to be a lower high confirmation setup of the second entry short. And this is a great high probability setup because if there's something wrong with the second entry short, a lower high confirms it, especially if it's at 2 key entry points. Okay, you want to sell high where the correction phase will end. And this is a great move. Your stop loss goes 1 tick above the signal bar. 8 tick target profit was quickly reached. The market continues working lower. The stock market is opening. I'm redrawing the short-term uptrend following these channels. We have a small break, new extreme. And right now, what am I expecting? Are you thinking reversal? I'm not thinking reversal because I want to see sellers to create new low. New low means there's going to be a low outside of the channel that is lower than the latest lowest low inside of the channel. Trendline rule still says that you expect new extreme and price action is breaking lower. And now we have a lower high, but it's not really confirming much. And this lower high, however, you expect new low. It's a little bit big. How big it is? 3.5 points. So the signal bar is quite big and it's a shame it didn't trigger 1 tick above this bull bar. I can mark it more aggressive. But because it's quite big, 3.5 points without a trigger above this bull bar, which would be ideal, you can consider because you expect new low. You would have to ride this out. Your stop loss goes 1 tick above the signal bar and you can see you manage to get the scalp. Now there is a failed second entry long, but at this point you don't want to take it because the signal bar is bullish and you can see how big the overall setup is. There is no way I'm going to risk almost 5 points worth of a stop. Plus, this short-term downtrend has a break new extreme. It needed to form much closer to the move. The move down already happened. Price action is going sideways. And you can see I have the blue rectangle. This is because we expect news. And generally, you don't want to be trading like 5 minutes before the high impact news and 5 minutes after high impact news. It can distort the price action, so be patient. Don't pull the trigger. And this is where the news came in. You can see a little bit increase in volatility. I'm going to subside it a bit. And you can see price action is reversing up. So sellers attempted to create new extreme, but news distorted the price action. This can sometimes happen. And what I'm going to do, I'm going to redraw a short-term uptrend. Once I see prices retracing too much of the initial downtrend, this is where I stop thinking about new extreme. I'm going to adapt because this uptrend is way too strong. And you can see we're about to reach the 61-80%. So this is a sign that we retraced too far. I'm not using the Fibonacci to calculate some magic number. No, I'm just using it as a tool to gauge how deep the retracement is. Because at this point, the uptrend is so strong, the bias reversed, and the bias in this market right now is bullish. And I'm thinking long. Okay, we have a small congestion. I'm going to mark it. You can see 10 bars stacked right next to each other. no trade zone, I'm going to mark it. I'm also going to redraw shorten downtrend working lower. Okay, you have first entry long. You can see 1, 2, 3, 4, 5 bar stacked. I can't take anything. 6 bar stacked. I'm just waiting. The downtrend created new extreme. Okay, I'm following these trend line rules, and I have first leg down, also second leg down. So if we're gonna get a break above EMA, which is happening, I'm expecting high-low confirmation of the two-legged pullback or failed second entry short. Why? Because I expect new extreme to be formed according to this uptrend rule, and there was no pullback, and market continues trending higher and keeps working higher again and keeps trending higher. So what I'm gonna do is I can see that this uptrend is quite substantial. However, I'm gonna measure the first leg, copy it, put it at the top. So I reached my measured move, and also because this uptrend is quite substantial, it started here, it even started potentially here, and this leg up was so strong, I'm gonna look for potential wider channel, something like this. But as I'm watching it develop live, I have overshoot. And I know this is overshoot because we're far away from the EMA, we keep breaking the trend channel line. If I extend it like this, there are no confirmations and we have the measured move. So I want to play it safe, so I'm going to mark it as overshoot, which I expect stronger correction in opposite direction. Overshoot can lead to break of a channel or straight reversal, okay? And also I can see that once again, we talked about it last time, I have the current open coming into play, so I'm not going to get trapped again. We have the important price level combined with the overshoot. I'm going to be patient, which means if there's going to be second entry long, I'm not going to be taking this. And I also like to draw my downtrend wider because I expect overshoot to generate strong momentum. Okay, and we have two-legged pullback. There is a second entry long, but you cannot take it below EMA inside bar or semi-inside bar. You actually broke higher, so not inside bar, but still overshoot. You need to be patient. You need at least high low or failed second entry short, which never formed. Market created the new extreme, and once again, pay attention to how market moves. With time, you will train your eyes to see the two-legged pullbacks everywhere, and it will start to make sense why price action moves in certain fashion. We're breaking above EMA, we're expecting new extreme for this uptrend. This kind of confirmed the bigger channel, and we need to get new high. The bias is bullish. I want to see some failed second entry short or high low. They never form. We actually have micro double top, which is very close to new high, and price action is correcting lower. We have 1, 2, 3, 4, 5, 6 bar stacked, 7 bar stacked right next to each other. Now, can you go long here? Because when I was watching this live, I even widened this a little bit because the break is so tiny. I was playing it as the channel is in play, but you still cannot take this second entry long because you have 7 bars stacked right next to each other and EMA is in the middle of the bars. Okay, you can see you have even congestion here. Be careful with these congestions. It is tempting. It's never worth trading the congestions. Plus you had overshoot, so you can expect stronger momentum. So at this point, I cannot really I cannot really go long because you have a break new high, and even if you're playing the wider channel, it is way too congested. Okay. Now we actually have a lower high, breakout pullback out of the congestion. It broke lower, came back, tested it, and this is a lower high confirmation of the failed second entry long. And if you're playing the channel with the break new high, you're expecting a wider downtrend because after there's a break in new extreme of the channel, what is supposed to happen according to market cycle? Reversal or correction. So since you expect some stronger correction at minimum, possible reversal, you're able to predict wider channel, and this is a lower high confirmation of the failed breakout, and I can mark it as a potential good lower high. Okay, break new extreme, uptrend played out. You're pushing below EMA, price action keeps trending lower. Okay, and also when I was watching this, I can see EMA flattening, consistent price swings up and down. I identify a potential trend range like this. I'm going to put it at the bottom at the top. And also this tells you don't want to be buying in the middle of the range. You want to wait for prices to pull back, but the range is not holding. In fact, price action broke lower, came back testing it, and it's acting as a resistance. Okay, so breakout pullback is a possibility. Okay, you can see move down, move up. You're expecting move down. This is not a strong trend day. This is a trading range day. So you expect market to pivot quickly. This is why I'm quickly adapting to break new high. Market is reversing. I cannot sell, however, far from the EMA. There's still a gap between the bodies. Wait for price action to pull back. A high probability setup needs to fit all the criteria, and you cannot jump the gun. You cannot rush it just because you're bored or anything like that. Just be patient. You have a new low, first entry short, pullback, second entry short. Horrible doji bar, neutral bar. I cannot sell below the bar. I have uptrend in play. And notice, you have a failed second entry short, but this downtrend is in play. The BAS is bearish. You cannot go long, and this is important what happened. One tick higher, all the bulls, they got suckered in this trade, and right now they're panicking. This is what I call double trap. All the early sellers who sold where something is bad with the second entry, either the bad signal bar, its congestion, or the trend is in play, and the early bulls who are trading against the trend got trapped as well. So this is a double trap, and not only that, because you have uptrend still in play kind of. So you may be wondering, okay, isn't this too aggressive? What I like about this setup is notice it acts as a triple test. One bounce, second bounce, third bounce. So the more reasons you have in price action, the better. And here we have triple test combined with the double trap. And this is a great high probability setup. I actually do this setup myself. You can see how all the bulls got trapped. Breakout pullback pattern also. You broke lower, came back, tested it. Great setup. And market continues working lower. Now you can see the trend down is quite strong, which begs the question if there is a potential wider channel, something like this, because I can make it a little bit wider and still find a fit here and here. So this was something I was thinking about. We actually have a second entry short, but I have uptrend in play. And this is just confirming the channel. Once again, you have 2 key entry points. Here you have actually 3 key entry points. EMA, trend line, and the resistance. Here you have 2. But because I have short-term uptrend in play, I cannot mark it fully high probability setup. I have to mark it more aggressive. Because, you know, the uptrend is in play, even though you think it's going to push lower. Lower high is good, but it never formed. You form new low. Okay, you get lower high here, but you cannot sell because it made low lower than this. So I'm going to treat this more as a first entry short. You actually have second entry short and also new high, first entry long, pullback, second entry long failure. So you have 2 high probability setups in one. And if there was a nice bearish bar, because the downtrend wider is now confirmed, you expect new low, this would have been okay setup to sell. But with my signal bar, unfortunately, new low, first entry, second entry short, new high, first entry long, second entry long failure, I cannot take it. But you can see it worked for a scalp. Quick little price action setup. Unfortunately, the signal bar was bad. And I can see once again, notice what's happening. EMA is flattening, starting to go sideways. Price action is starting to trend sideways. So I'm going to identify the trend range. I'm going to redraw the short-term uptrend. You have first entry short. You have second entry short, but you cannot sell directly into the bottom of the range. Now you actually have kind of like a visual to like a pullback. And you have quadruple bounce at the top. Kind of like a first leg, pullback, second leg. Now, this is quite tempting setup because you can see the bulls are struggling to break the resistance, but you need to make sure you have enough room here. So I can see I have barely 2 points. So if I'm going to enter this trade right here, I would like to use some limit order somewhere here. So if you're going to sneak in with a limit order, you can consider, I'm going to mark it second entry because I'm treating it as a visual one. You can see there's the first leg, there's the second leg, and the range is tight, you're selling high, but you need to make sure you're going to use limit order. You can see the lower high. You just have no room for a scalp, so you can't take this. It barely worked for a scalp, actually quite decently, but I still think you need to use limit order here and market reverse higher. So I'm going to redraw short-term uptrend like this. You have a small break new extreme. You can see I'm just trying to follow the channels. They always keep me on the right side of the market. Break new low, little market cycle trend range. We reversed, and notice here we have a second entry long, but this uptrend played out with the break new high, and you know, there ended up being channel like this, but problem is you don't know this when you're watching this live. How do you know that this channel is going to be the correct one? There can be a break new high, so you know, and there is no swing to help you kind of angle the trend to make sure your joint is wider. For this reason, it's hard to market. It looks great in hindsight. You can see second entry long to like a pullback. What's good here is that the downtrend played out the break new low, and it's going a little bit sideways reversed. So local price action is good. You know, once again, more advanced trader can take a setup here. Why not? But you need to be more advanced. You need to know, okay, we have a breaking low. Price action is trending lower and massive push down. So what is the overall market structure? Clearly a trend range, which means we expect market to pivot, not particularly super broad channels. Once again, move down, always trying to contain it within a channel. I have a first entry short, I cannot sell it, uptrend in play. I have a second entry short, break new extreme. New low, break lower here, first entry short, failed, second entry short. If there's going to be a trigger below this bar This is going to be a great high probability setup. The momentum is there, and also you can see you have textbook tier 1 signal bar. Great setup. New low was reached, and because EMA is flattening, I'm also going to make the trailing range a little bit longer, something like this, which means I'm pausing my selling, downtrend played out with the break new low. And if you have trouble seeing this, you have first leg down, break, second leg down. You expect reversal. There was one push down, but market is suddenly reversing. So I'm going to redraw a short uptrend. Notice how EMA flattened. When you're confused, you're probably trading some form of a trailing range. Okay, you have a lower high, but this channel doesn't have clear and distinct new high. Maybe if I draw it really tight, you have micro break new high. You know, this is a great signal bar, but the problem is you really want to see failed second entry long because this channel doesn't have clear new high. Now in trailing ranges, this can sometimes happen. Just pivot at the top, pivot at the bottom. That's normal. But the signal bar, how big it is? 3.75. Yeah, so stop is 4 points. Is it really worth risking 4 points here? Not really. I'm going to withdraw. Short and downtrend. Okay, I can see the range holding. This is good. Can I get a nice failed second entry short? I get high low way too far up. And I get a failed second entry short here. This is great setup context wise. This would be reversal pattern. New low, first entry short, pull back, second entry short. But the signal bar is horrible. You can see at the close of the bar, it traded down. Half of the body is bearish tail. Had it closed more bullish, you can go long here, not like this. Market continues working higher. And I was expecting to treat it as new high here, but you can see we created one leg up. So I'm going to redraw a wide uptrend because EMA keeps rejecting every single time. And it visually looks like a one steep move up, not clear broad two legs. Rejection here, here and here. Move to new high, but there was another leg. Price action broke back above the EMA. And notice what you have. New high, first entry long, pull back, second entry long. And I can see that the breakout area is now acting as a support. Prices came back, tested it. The bulls jump into the market, indicating, okay, the breakout failed. Now it's a breakout pullback. The support is holding and you have second entry long. Why are we thinking bullish? Because we need to get new high for this uptrend. The signal bar ended bad. I'm going to market more aggressive. If you have better bar on your chart, this is a great second entry long because uptrend is new high. You can see new high was reached. I'm going to mark it. You have a break new extreme. And now it's getting actually too late, so you don't really want to be trading. Today's structure was a big trading range overall, which means you have to locate the extremes and follow the tight channels. You can see there's always a channel being present on the chart. Train your eyes to see the two-legged pullback, follow the channel rule, and take the high probability setup. Form of a two-legged pullback or confirmation setups. They're there. Wait for the correction phase to end and push phase to start. I hope you had a good trading day. I hope you found the video helpful. I'm going to talk to you next time. Good luck with your trading.